hoping Matt would not get back so I could make the empty chair joke. I'm like, I'm excited to join you with empty chair. Empty chair is going to give you great analysis. He got back just in time.
Nobody knows what you're talking about.
I know what Matt is. Matt was not in his chair until like that. As soon as we started, and me and empty chair were gonna have a nice relationship going for that for a few seconds, but I'll have to turn to the market. Gold miners up. Market's still looking for a theme. Matt, I am just having I'm a market nerd. You're a market nerd. I'm having the funnest time this week, just joking to myself about bad news equals good news, except when it's bad news, except when it's really bad news. But if it's so bad in news, then maybe it's great news. The market doesn't have a theme right now, does it?
No, the market does not have a united theme, but I'm still wondering what this horrific news is you're talking about.
Oh no, because the market was, you were talking about this earlier in the week in the halftime report, right? Like, market trading on a bad news type vibe, right? Recession coming. We mocked it a little bit at the start of the week. By a little bit, I mean, I think I cursed.
It's very interesting to see the market price action this week in the face of some of the economic reports that have came out, right? One day you get, recessionary fear analysis, and then the next day you get, this equates to the Fed's going to lower rates in September, and we already got Canada lowering rates. And so you started this week. It's been a weird week from a price action perspective, from a macro. There's no doubt about that. You start this week with, are we going to go through a recession? Lots of volatility. Will we or will we not? And then obviously that was a nonsensical conversation for the market, talking about putting the cart before the horse on that one. But then the very next day, they get the same type of negative economic news, and they're like, ooh, but we're also going to get an interest rate cut in September at this point. And so let's go up, up, up. So yeah, Mark, I would say the market is still, despite the improving technical condition, and we certainly have seen an improving technical condition. And I think the number one thing that stands out to me in the technical conversation is what I wrote about last week in the newsletter. At no point, I said this on Friday last week, at no point in the previous edition of this type of volatility at the top end of a trend did we see the market fight for support. And regardless of the market theme,
in fact, you clarified, and that influenced me, Matt, because when you pointed that out, I turned slightly more bullish in my plays this week than I would have done otherwise.
Well, it really stood out to me because there was no point back here where you fought for support. You gave. Here on Friday last week, you fought for support. On Monday this week, you were testing lower, finished higher. Wednesday this week, tested lower, or Tuesday this week, tested lower, finished higher. And then on Wednesday, you just had that big upward movement in price and were able to hold the bid. Those things are really, they stand out to me from a technical perspective. And so I certainly agree with the analysis that this market does not have a united theme, and it still feels like the market is confused on the macro side of the equation. Just go look at GDX, for crying out loud. You look at GDX, oh my goodness, we're all going to have a recession on Tuesday, followed by
somehow gold doesn't, and
we're not going to have that recession. So it is a confused market right now. There's no doubt about that. And confused is, for those of you who maybe don't understand what me and Mark are talking about on the confused market, when you think about the top-down approach to the market, you're really anchoring against the market indexes to understand the themes that are emerging here on the market indexes, the fundamental argument, the behavioral argument, the geopolitical argument, whatever argument is being made out there. And when you have a unified theme where most of the market is seeing the exact same thing and they're talking about the exact same thing, it makes it easy. It makes the journey in technical analysis easy. I wouldn't exactly say it's been easy technically in the last week. Despite the fact that the S&P 500 is improving, it has not been easy out there. And so, yeah, it's an improving condition. You certainly like what you're seeing in the S&P, but when you come over here to RSP, you're still stuck in the middle of a symmetrical triangle where you really don't have any united theme. And so
who trades all that other stuff right now? Like, it is Max.
Well, it's all Mag 7. It's obviously the tech trade is playing out, and kind of what we talked about with the software versus semiconductors. Semiconductors have won that a little bit this week. And so I still see it as a mixed market, but I also have a healthy dose of respect for multiple time frame breakouts as well. And so obviously we're having a leadership carrying the market here. You can see that very clearly with S&P breaking out versus RSP still kind of stuck in the same pattern. But in general, I think you have an improving technical condition. I think labor market numbers are extremely important, though, in terms of having some degree of unified theme in the market, which the market does not have one right now.
Yeah, on labor, this was what I was spinning my noggin about this morning. I'm like, have bulls set up a win-win scenario tomorrow, where if as long as there's not dramaticness, right? As long as there's nothing dramatic, like if you miss slightly, well, that means Fed cuts, right? If you beat slightly or come in line, well, that means, hey, what recession? The economy's good, earnings good. Like, what do you think about tomorrow?
I think tomorrow's going to be interesting. If you get a miss, I would a slight miss. I would.
Yeah, I mean, we're talking in the ranges, right? Bull set up and win. If you get dramaticness, all bets off.
Yeah, slight miss, slight beat. We're not changing anything in the conversation. You're probably holding the bid, and you're probably still going to be talking about a cut in September as of right now. A big beat here. I think a lot of that candle yesterday was based on interest rates, and so
yeah, I do too.
Here, I would say you give back a little bit of the candle yesterday. A big miss here. I have zero clue. I have zero clue. When you're having a macro conversation of interest rates versus economic, I don't even want to say the word recession because that is not happening this year. But when you have the recession conversation, right? When you're having that recession conversation, and I don't think a lot of people in the market are having it, by the way. I think there are select people in the market having it. But you have a recession conversation versus an interest rate conversation. A big downward movement in price could spark, not downward movement in price, but a big miss on labor could spark that the economy's tilting a little bit, getting a little bit more concerned on the economy. On the flip side, you would immediately see an increase in probability of a rate cut as well. But I would say the recession fear would overtake the interest rate conversation in the immediacy. So big miss on the downside. I would expect downward movement in price.
Yeah, big miss. Yeah, like it's like anything in line, I think is a bull's win, especially from a stability standpoint. It's just if you get that dramatic.
Anything on the radical edges, I think is a bear win. Anything normal, I think is a bull win.
Yeah, that's where I'm at too.
I know it's weird. It's weird to think about it like that when you're thinking about, but that's the things you have to think about in good news is bad news moments. And I'm not sure we're anchoring against a good news is bad news moment, but we have certainly seen some data this week to suggest that.
Janet Yellen's formulating the numbers, so I'm sure she'll get them out just right.
I don't know what Janet Yellen will do. I do know the market will based on the expectation versus what comes in, though.
She's busy at work today. But like, man, those bonds, when you look at we give me TLT on the chart. Like one of the stories in the market, we'll write about this in the newsletter this week, has been you have seen bond yields drop. Now, Treasury started a buyback program last week. How much does that have to do with it? How much does soft economic data? How much does global banks starting to cut? Maybe a little bit of everything, right? But this chart has become kind of irrelevant to the market. TLT is the reverse of yields. So if this is going up, yields are coming down. I don't think we got TNX on.
I was going to say we should have a TNT yield.
TNT is a good one. But those interest rates. I mean, we've seen rate cut expectations increase pretty good this week. Bank of Canada, ECB, what they've been doing this week?
Bank of Canada lowered rates actually, and the ECB is expected to start lowering rates as well.
And so global.
Now, I will tell you, the ECB's inflationary projections are literally, you might as well write them on a piece of paper with crayon. But yeah, that's what they are going to do.
and global banks tend to work in unison, right? They tend to work in unison, except for the Bank of Japan, who just does its own thing. But what do you see out of the Fed next week? Do you see a lot of yada, 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 talk out of both sides of your mouth?
Well, I'm sure we'll be talking about the Fed in the podcast, and I'm sure we'll be talking about the Fed quite a bit next week. But my anticipation is the Fed's not going to do anything next week.
Just even J. Powell presser?
I think it'll be rinse and repeat last time. I don't anticipate massive movement here. There has not been massive movement on the economic front. Maybe updates economic projections to the downside. That certainly will help his inflationary projections, but I don't think they have the data to do anything necessarily. Do you?
No, but that doesn't mean they're not gonna, right? I just like when I see one bank cut, when I see another bank cut, it just makes me think that September cut is live.
Oh, if you're talking about the September cut, yeah, there's the majority of the market is expecting a cut in September after this week's price action.
And if you have soft,
primarily based on soft economic reports that have came in. So the soft economic reports have certainly increased the projection of a rate cut in September. And so where I was before this week was December was kind of the decision point. I think now the market is fully embracing a September decision. I personally don't believe that the Fed has the data to even come close to a rate cut conversation, but they've created this environment. They're stuck between a rock and a hard place, between soft economic data versus elevated inflation. That's stagflation.
What do you call that? What do you call that? Starts with an S.
Well, according to Jay Powell, unless it's 10% on the unemployment and on the inflationary front, we can't use the word stagflation. Apparently, he created some outlandish definition of stagflation that only he can look at.
If nuclear bombs aren't dropping, you can't call it war.
Pretty much. Pretty much. So, no, I don't think they have the argument to do a rate cut in September. I think it would be foolish to do a rate cut in September personally.
I think these
hold on, let me finish my thought. My opinion notwithstanding, the market expects a rate cut in September. And so for the June meeting, no, I don't expect much besides a little bit of the rinse and repeat Powell performances we've had from the last couple of months, which have not been great, honestly. So I don't expect any cut next week. I expect a cut in September the same way as the market does.
They have been sympathetic, and this goes to the general lack of a theme, confusion, right? I mean, these conversations don't produce, oh my gosh, this is but they do produce consolidation. They do produce cash flow. Upping your theta in this environment, not a terrible idea. Not a terrible idea. Will you give me small cap chart real quick? As we're breaking out to all-time highs, and you referenced this in the RSP. No, this hasn't been an everything, moment, right? Hasn't, this kind of really reminds me of April and May of last year, where index did great. Everything else kind of looked some version of this. And that lasted a couple months. Do you think this is directly attributable to the lack of general theme in the market right now?
Yeah, I do 100%. A lack of general theme in the market, you're going to get the safety bid. And I think that's what you've got lately is the safety bid more than anything. And that safety bid does include big cap tech out there. And I also don't think big cap tech running is that, quite shockingly. That was kind of our expectation coming out of the volatility, was big cap tech was going to lead the charge. And so if you'll recall back a month ago when we were having the conversations back at the low point coming out of that volatility, what was the analysis coming out of that? Big cap tech is most likely going to lead the charge from a safety bid perspective when you're coming out of this type of volatility. And so as you're coming out of this type of volatility, obviously the market has went up in general, but overall RSP and the RTY, which are both a little bit more economically sensitive than what we do see in the weighted index of the S&P, they're all kind of stuck here in some degree of symmetrical triangle formations where you got lower levels of resistance, increasing levels of support. You can come over here to RSP. You can see the exact same thing. You got that increase in support. You got the downward movement in price and resistance, creating those symmetrical triangle type technical patterns. And so what you do see is you see Nvidia front running the split. You see Google and Meta doing very good. You see Apple doing fairly decent in that time frame. For example, when you look at let's go to FinViz here and let's look at a heat map very quickly. So in that same time frame, let's just go look at the heat map for the last month. All right. So in that time frame, the heat map in the last month, where's all the green? Well, you got consumer staples done pretty good. Healthcare is very mixed right now. Most of what we're seeing here is technology. Now, software obviously down a little bit, but isn't that an improving condition?
Yeah, that looks a lot better than it did.
It looks a heck of a lot better than it did because once again, that
was a good call on
kind
your
of playing
part.
out. And so you're seeing big cap tech, but you're not seeing tremendous weakness outside of energy, which is obviously going with crude oil right now. So you got the market, the broad market, basically in some degree of neutrality right now. And you got the S&P as the leadership in the market in a slightly bullish area of the market. And that's why our rankings are in that 35 to 30 rankings right now.
Yeah, no, it's sign you off on a
Believe me, if the market was consistently trading in a multiple time frame perspective, we will upgrade the marketplace. When we get a united theme, we will upgrade the market. Our rankings in the Tackle newsletter every week, all of this is built into those rankings. Every single aspect of this conversation is built into the rankings. And when we get a united theme with a multiple time frame breakout and the market becomes easy again, the same way that we did it back here in that trend, and the same way we did it back here, we'll do it again. So I just think a lot does in the short term rest on labor market tomorrow. I see this as a technical conversation more than anything until we get a united theme. And so let's just let it play out.
Give me gold chart. A lot of cash flow oriented charts out there right now. For a directional.
Real quick before we go into gold, because you had a lot of questions in the first 20 minutes on economics, Fed, central bank.
Yeah.
Like that's where all of your head was at. Mm-hmm. It does seem like you're a little bit more concerned with the macro environment than I am right now.
I don't know. No, I don't know. Not concerned in the sense that I think something bad or something good. It's just that it seems like, ever since that PMI report from a couple of weeks ago, right? NVIDIA has earnings, PMI, economic data has created more intraday volatility than it has in a while. And so, as the market searches for a theme, discussing through that so that when one emerges, I think the market's going to trade on it and either take a move up or a move down, and probably meanders up until that emerges. So it's more talking through it, just because of the sensitivity on the market.
Would you say after the Bank of Canada, after the European Central Bank, and kind of the general theme we're seeing out there that these banks are going to cut this year?
Yes, absolutely.
They are absolutely okay. So in the last month, would you agree that there's been some confusion and some open-endedness regarding what the central banks were going to do?
At least in their rhetoric, yes. In their heart, no, but in their rhetoric.
Okay, let's just be very specific on this conversation.
Okay, sorry, I'm having a left brain. Okay, let me only access
about your opinion of it. I do, but I like very specific.
Their rhetoric has absolutely been open-ended.
Okay, so the rhetoric was open-ended, and with the rhetoric being open-ended, the market was embracing multiple different themes, correct?
Correct.
Because they had a theme, and then inflationary bumped up, which killed every theme and sent the market into some type of shock regarding what are they going to do? What are they not going to do? But as we now move into June, and as we start getting a little bit further in this saga, we are starting to see now. This is not something I personally agree with, because I don't think the world banks have the actual inflationary argument to justify cuts yet. But it doesn't matter what I think when it comes to what the central banks want to do. You now have Canada doing what they're doing. You have ECB basically coming out. They're going to be cutting, and they're going to be doing multiple cuts. The ECB, the Bank of Canada, and how I know these central banks work, they do not work alone.
They don't work alone.
They do not work alone. They work through the Bank of International Settlements. It's all coordinated. And so,
except for the Bank of Japan, who does its own.
no, they're accepted at the table. They just can never do
Well,
it.
no, they attend the cocktail party. They
Yeah.
just.
What are they going to do? They own 90% of their own bond market. So there's not much they can do. But they're accepted at the table. They're the third most important currency in the market. So they're accepted at the table. But my point is, it does seem like if the market can if the market accepts the fact that they are going to get a cut in September
or July.
Oh, my conservative heart would die a little bit if we cut in July.
But you cannot rule it out. You cannot rule it out.
No, you can't.
Just because of the trend.
You can't rule it out. You can't rule it out. I think it would be a mistake, but you can't rule it out.
Because if they want to, and that's the plan, and it's obviously.
My point is this: doesn't matter from a thematic perspective. Doesn't matter, since we're debating themes here today. Doesn't matter if the market's going to get a cut in July or September if they know they're going to get a cut this year.
As long as that becomes concrete. Because remember, we've in the last few weeks, you've had, in fact, if you go back over the last 6 weeks, you've had rate cut expectations go, really low at some points for this year. And so as long as they stay elevated, I think it creates a bid in general, especially for certain areas of the market.
A fascinating conversation on a doji day in the marketplace. I will say that. I do think the market's confused. I do think the market is searching for a theme. I do not believe the market has found that theme yet in front of labor, in front of CPI, in front of the Fed next week. But I also feel like that theme is closer than we're much closer to that theme today than we were at the start of this week. Would you agree with that?
Yes, I would agree with that. Yes, absolutely.
And do you think that's because the market is removing some of the risks that these central banks would not cut this year?
Now yes, I think the market's absolutely removing that. I think
when you remove one of those variables from the equation, things do get simpler, right?
They do.
And things are getting a little bit simpler in the last couple of days, correct?
I think so.
And you can see that clearly on the chart. Correct?
Yes.
So we have an improving condition. We're closer to a united theme. We're closer to a multiple time frame breakout. This, as long as labor does not puke up this improving condition tomorrow, I think you got to be looking on the bull side going into next week.
Yeah, no, like earlier in the week, like who wins this? I was 60-40 on the bulls. I'm about 75-25 now, and reflecting positioning to support that.
My only hesitation is labor, Marco.
I just think there are more ways for the bulls to win the theme coming up.
If you remove the concern of the will we or will we not get a cut, the bulls have the argument.
And I think
again, one thing I want to be very clear on: this bulls have the argument. While everybody's having a risk, not everybody, but there are circles in the market today that have concerns on the economic side of the equation, correct?
Yes.
Okay. The last question I have on this before we can move on to a different topic.
I like that. I could talk about this for like 8 hours.
What in that time frame that the market has embraced, and it's only been the last couple of weeks, but the market has embraced the recessionary analysis, right? Shockingly, right in the moment when they also didn't think they were going to get a rate cut, that they started begging for a recessionary analysis so that they would get a rate cut. I can understand the game the market was playing there. I can even understand the game the participants were saying on CNBC and every other financial media outlet there. I understand it. They're trying to puppeteer the Fed a little bit on that. Totally get it. Okay. So in looking at that, let's move on. I'm good now.
Yeah, listen, obviously, Matt and I are going to have some stuff to discuss on the podcast this week.
I figured it out in my head where I was going, and I was just like, Yeah, we're good now on this conversation because my question was going to spark a 45-minute diatribe from you and me, and we want to get off it. So I will save that topic for the podcast this week.
But it's important to understand themes. When you understand the themes and the drivers, I know I use it to, my position sizing, right? My position sizing, how bullish I am, what my bias is, driving things. And so like these kind of conversations will always be important to me, always be important to me.
They're important to me as well. I obviously I enjoy talking about the themes that emerge in the market and the central bank versus the economic conversation and having an understanding of which one's more important to the market in the moment. But once again, we'll talk about this in the podcast. But in the moment that we've been having that conversation regarding the economic recession, earnings expectations are actually going up, not down.
And that is a point that I actually have on my notes to talk about on the podcast, that you cannot have a recessionary conversation if earning projections are going up. It doesn't stick. It'll stick for a day.
That's why it was so confusing to me when the market had this, and it was only short.
The market doesn't left brain it every day, bro.
They should.
They don't.
They should.
This is
they should.
They don't left brain it every day, bro.
They should. Again, earnings projections are going up when the market was embracing a recessionary thing. That tells me that the market wasn't really embracing a recessionary thing. That's what it tells me. It tells me that that was just a nonsensical conversation to try to describe a couple days of volatility. That's what it tells me.
Well, no, the market headlines trying to attribute causality to general uncertainty. Listen, when you want to talk, let's go over to crude oil. Give me crude oil on the weekly chart. When you want to talk about the importance of themes, OPEC has your back has been a theme in the market for 8 years.
2014, 2015,
it has been the basis of why I have bought 100+ support bounces over the last 8 years. It has given me confidence when that occurs, and you've had a theme. And we give me this on the weekly chart. Now, what's fascinating, I had my hard 14 moving average class last night. People seem to really like it. We went over structural patterns on longer time frames, spent a lot of time on the monthly. But like right now, we have this concept in the hard 14 called gravitational pull. Basically, like you can go below, above a moving average. Don't be surprised if you end up where you started.
3 P's of hard 14. Pockets, pinch, holes.
Especially on a first test. And so on crude oil right now, you go way below the 200 weekly, and then all of a sudden you find yourself, and this was a first test, that thing had not been tested in several months, and working your way up. I mean, this, I believe, is just moving average mechanics playing itself out. But Matt, it is really hard for me on the change of theme. And we'll talk about this more in depth in the newsletter this weekend and in the podcast.
I think this is an extremely important conversation personally.
Yeah, that there has been a change in approach that OPEC has to markets, where they are moving from a price stability as the primary importance to a market share as primary importance. And that freaking ain't bullish. That's not bullish. It's a major thematic change, the biggest one in oil in 8 years. And so, long story short, recognizing the theme, give me a doji at the 9 and some downward momentum here.
I think this is lining up for a short. I do believe that. Doji confirmation and giddy up and go here. I see this as a short-term bearish downtrend with additional momentum followed by a bearish retracement. This is standard technical.
This is standard technical bearish retracement, and I think understanding moving average gravitational pull on a first test helps you understand. But this is setting it, and I don't know how you until something changes, man, until something changes, maybe China unleashes a stimulus bazooka, right? Something happens, but upward movement, I'm just on the bear side. Like
U.S. economy starts doing some type of growth, which
something,
that
right?
is not happening yet. Europe does growth, not happening. Both Europe and the U.S. economically are more stagflationary based right now than anything. China, certainly you could see some growth coming out of China. They had an upgrade in their GDP forecast just recently, and a couple banks upgraded their expectations on Chinese growth as well. I also saw a couple earnings reports recently that cited China as the strength for growth as well. I think China is a big variable,
It's a
obviously, on the
huge
growth side.
variable. I mean, it's
The growth
oil.
side
There's
of the
going to be
equation.
variables, right?
I would say China is a positive on the growth side of the equation, but it's a big variable. I would say the U.S. economy is a positive on the growth side of the equation. That's a fairly large variable as well. So there's variables on the economic side of the equation. My concern here is twofold. Number one, technically, you have a bearish retracement with momentum in trend following, OPEC basically telling everybody there's no reason to have a buyer in November and December of this year. You look at this on a weekly chart, that did pull you right back up into that 200-day moving average. But if you can't get above that 200-day moving average, that's not a good look here. And so if you do confirm to the downside, this could get ugly. And so it's a little bit of a scenario where you could work back up into the range and you're getting right back into that bullishness at 80. I just don't see that to be a likely occurrence, though. It certainly could occur, but I don't see it being a likely occurrence. And the reason I say that is because what you said at the very beginning of this crude oil conversation, Mark, you said that Saudi Arabia and OPEC Plus has shifted their theme from one of market stability to really kind of market cap. And that's a big difference, bro.
Because let's be, and we're going to talk about this in depth. Biden and the Democrats can lambast oil for manipulating prices. I saw something. U.S. production is extremely high.
U.S. production is the highest it's ever been.
In fact, if I was Biden, I'd be like, listen, we're pumping. We've been pumping. What are you talking
Biden
about?
should do that. Biden will never do that. He would offend the left wing of his party, which is
because
ridiculous.
U.S. production is extremely high. Oh, and so
it's
OPEC
a record high. It is a record high. It is a record high.
Never been producing more. Like just from a political standpoint, I would be campaigning.
Think about this. Saudi Arabia and OPEC are shifting their theme from market stability to market cap because of American energy dominance. That is why they are doing
because they're basically saying, screw this. We're not going to be the ones that are sacrificing to stabilize while you profit off it. Okay. Not going to happen. We're done. That's what I see.
To a certain extent, yes. But if they continually give up some market share to the U.S. energy companies, which they absolutely have over the last 5 years, absolutely they have over the last 5 years, then they lack their ability to control the marketplace, which they have enjoyed since the 1970s. And so, Mark, this is not the first time, though, that Saudi Arabia and specifically OPEC has done what they did this weekend when they shift from market stability to market cap. We know that argument. That is the 2014 argument that OPEC made very publicly, mind you, of wanting to control and corner the oil market. And how they did that was they opened up the floodgates of supply. And they said, we are going to bankrupt the fracking companies out of the United States that drill for oil around that $45 barrel. We're going to bankrupt they were even targeting Russian energy companies. They were targeting European energy companies. They were targeting every company in the world not named Aramco out of Saudi Arabia, basically. They were saying, we are going to corner the market by liquidating the market with oil and bankrupt these fracking companies. I made the argument then, I'll make it again. Saudi Arabia, you're going to make a really big mistake on this one because you don't understand all the dynamics here. Saudi Arabia doesn't have the ability to do what they used to be able to do. Nobody does it's too big of a market these days, quite frankly. And so I just don't feel like this is a wise choice out of Saudi Arabia. I don't think it's a wise choice out of OPEC to embrace the market share argument versus the stability argument, because what we saw in 2014 is the U.S. fracking companies didn't go out of business. They just shut down their pipes for a few months. And then once the volatility and once that little battle of the fracking war of 2014 was over, guess what American energy companies did? They brought the roughnecks and they brought them right back into the onto the oil rig and into those working on those pipes, and they started producing the oil again. And so I don't know what Saudi Arabia is going to achieve by focusing on market share versus market stability. Because again, we know the conclusion there. And for the first time in history, Saudi Arabia went into $100 billion in debt, trying to bankrupt all the fracking companies out of the US. They didn't bankrupt the fracking companies. The fracking companies came right back stronger than ever. American energy dominance is higher right now than it has ever been in the history of mankind. And it's forcing Saudi Arabia to literally come off a philosophy that they've only came off of one other time. And so I think it's a mistake. And I think it shows weakness out of OPEC, quite frankly.
Yeah, no, and so like, some people, like when you talk macro, like we have, this has been macro
This
Thursday.
has been a macro day. That's what you get when you get a nice little 10-point doji in the market, guys.
Like these conversations can set up not just a trade, but trades, right? It's like, when I identified the uranium theme, right? And we're talking about that 4 years ago, that set up years of trades, right? Like these things, AI, great example, right? Setting up many good trades. Guess what? I think we got a few years left in that one.
We got many moons to go on that one. Yes.
And so when you identify themes, sometimes, who cares about like bad news, good news, right? It's curious. But what are themes that emerge? And this is a big one. That 50 monthly better hold, Matt, on crude oil.
Yeah, it should, because look what happened when it didn't in that 14 conversation. Just straight down. I think it's mixed right now. I got a bear lean here on crude oil, and if I just got this as a doji and go, like doji confirmation. That's all I need here.
No, and that's the thing, right? So you got a macro theme, you put things on watch list, and then if you get the pattern, hit it.
Yeah,
right. Get the opportunity, hit it. That's what you do.
Do you think one of the reasons why you and I focus on themes so much is it helps us understand the technical price?
Yes, I understanding why things are is very, very important to me, right? Because once again, like, I'm hitting it now, I'm hitting it again, right? Like, and then when you understand like gold, like when gold, like we were on the halftime report on Tuesday and gold down, I was like, I sold naked put on GDX today. Why? Because I understand the broader theme, right? And so I see sell-offs as opportunities rather than freak out moments. So
yeah, I got some concern for crude oil. I don't like what Saudi Arabia. Now, mind you, I got concern for the top side of crude oil. Crude oil goes down, that's going to help the Fed and their inflationary conversation.
Fed's cutting in July is not off the table. I'm telling you, bro.
Off the table.
Whether it should be, Canada's inflationary numbers should have taken its cut this week off the table. It didn't.
No, there's other things that are taking a priority over inflation. That makes me sad.
Now let's go to church. See if some consolidation. What do you think here, bro?
What do I think?
Mm-hmm.
I think IBIT is on a journey to 42, and I think our next conversation is a high base breakout on a multiple time frame.
I think IBIT's on a journey to 75. So
listen, I have long-term analysis and I have short-term analysis. Short-term analysis, I think 42. Listen, you know me, bro. I'm not going to say anything above 42 when you have a multiple time frame.
Give me this on a monthly chart. Like we were looking at monthly charts. I mean, on a monthly, give me a monthly. Let's take it. Tell me if that was a daily chart, you'd be like, oh, that's a high base developing. That's a high base developing, right?
And it would suggest breakout of 42.
Yeah, you got that's by law. You got to play that breakout of 42.
Everything between 38 and 42 on IBIT, which is what we're looking at when we look at Bitcoin from now on, is basically neutral up to 42. And everything that we've been discussing on IBIT in this trade, if anybody made it, was basically from 38 to 42. And the reason you're front running is because you know in the back of your mind what can happen above 42. You know what can happen above a breakout channel. You don't know it's going to happen, but you know it can happen. And what I mean by that, you know you can get that big green candle on that breakout. There is no doubt about that. So I just think this is an ongoing conversation that I'm not going to, get too caught up in the intraday volatility here. As long as 38 holds, you got your argument to 42, and if you get a clean high base at 42, that's a add type situation. So my plan is to scale off at 42, trail stop loss as we start to get to 42, but give it enough range that it can work through 42, and then add back on the breakout of 42. So that's the plan.
Not a bad plan. Not a bad plan.
It's a standard front running plan that if you ever want to learn how to do it, come over to Tax.
And I am so tired of dealing with options on dirty Bitto. IBIT, come on.
Listen, I've embraced the IBIT. Like I'll just do shares until they get options. I'm fine with
I've
it.
embraced doing options on conservative credit on Bitto. Don't mean I like it.
No, I get it. I get it. You got to do what you got to do, though, bro. If you want to get your naked put, you got to go to Bitto.
I got to go to Bitto. I got to slum it. I got to slum it with the peasants.
Slum it with Bitto. That's you got to slum it with Bitto. That is funny. Technically, you are slumming it with Bitto.
The reason the technicals are off is they do these massive like dividend payments because they got so much of their stuff in treasuries and stuff, and so it throws the technicals. The chart doesn't even exist from a technical.
It's why I like IBIT.
IBIT is just a pure like, oh, this is the Bitcoin chart. Oh yeah, this is
honestly IBIT. A lot of Bitcoin ETFs look fairly similar to what Bitcoin does.
Yeah. So listen, last Tuesday when I joined you on the halftime report, you wowed me with the fascinating news out of Sentinel-1.
It was news.
I didn't see anything on my radar that yep, that's about as interesting as I found it then.
You want to talk about a bear flag, bearish retracement following a bad earnings report? CRM starting to show that deeper retracement like we
because the sell-off was nonsensical relative to the news.
Okay. Yes. Slight beat, should have saw a slight gap down. The worst gap down since 2004. Modern markets are the Mountain Dew markets, and this one I did feel was a little bit overdone, overcooked on CRM. That's why I wanted to talk about Tech Turf 4 last week in the newsletter.
The only thing I saw that interested me was Lulu yoga pants. I don't know what you have on your.
Well, I definitely
agenda.
have Lulu. Lulu was the biggest company to report this week, even bigger than CrowdStrike. I would say CrowdStrike was probably the more important report, given the fact that we were having a software versus a technology conversation in general, software versus semiconductors. I do think CrowdStrike was a little bit more important for the market this week. But Lulu's a massive company and very important in the consumer discretionary space as well. Are people buying expensive pants at Lulu as of right now? Well, according to the earnings report, Mark, they are buying some expensive pants there right now. 254 against 238. That's a beat on EPS. Revenue came in at 221 versus 220. Slight beat on the revenue side. Revenue was up 10% year over year. Now, Lulu had a very mixed guidance, both on the slight side of the equation, though. They had a slight drop in forward-looking guidance for the quarter, while they had a slight increase in forward-looking guidance for the year. It almost kind of matches the expectations on monetary policy there, Lulu. I kind of feel like I know what you did there to get that guidance. But in terms of that, they did drop guidance in the quarter, increased it in the year. Technically here, Lulu has been a forgotten child for a while.
Yeah, and I saw they did a buyback program as well, increased their
Yeah,
buyback
look at
program.
the secondary
I
information.
saw that they, increased their buyback program as well.
Okay, did they increase it or did they announce one?
No, they increased it. They already had one ongoing and they increased it.
Already
So,
bored of an increasing in stock buyback programs.
hey, listen, when you think of yoga pants, you think of Mark Justice. That's what you do, right? Right?
I, I know what to get you for
I
Christmas.
have never been in a Lulu store. I've never been in one.
You've never been in a Lulu store?
I've seen them. I've walked by. My daughter has said, "Can we go in?" And I've been like, "No,
Oh,
I know what's inside for me." And we're
listen, you want to get your wife happy? Go to Lulu, get your wife something. Come on. I've been in a couple Lulu stores for the wife, and it was a good experience. It was a good experience. I was very happy to leave the store. But in terms of Lulu here, with that stock buyback program, good for them. Technically here, again, it's just been off the radar for a very, very long time. And the question I have, does this report wake Lulu up from a potential reversal situation? The
I mean, it's at a level that where you might think it might, right?
and that's what where I was going to go here is Lulu. And again, it's not one of those things where I'm like, oh man, we got to watch Lulu. But if it's one of those things that does develop pretty cleanly, that could be something to keep your eye on. So I think the positive here for Lulu is where you're forming the support level. And that's right around this $300 number. That $300 number does coincide with other support over here. It's choppy, but it's a significant whole number. And so you do have support right there and pretty significant support. Now, what else do you have? You got a deeper retracement there as well. So it's for me, I don't see anything like high base at 340. I could see aggressive traders looking at, but no, this would have to go through time corrections because of the aggressive downward movement in price following last earnings report. You just need a lot of timing here, Mark, because you keep talking about longer duration moving averages. Well, you're going to have longer duration moving averages on top of the price because of the aggressive nature of the drop in price. So I just think it's in a world where you for an individual who does love reversals, and I do love reversals, I just think there's going to be better ones than Lulu. Personally, you need more time here.
You need more time. It's going to take a minute for this to develop. It's just going to take a minute.
Well, I don't really care about V-shaped recoveries on an individual stock play. And so if it does, good for Lulu. I could care less. There's a lot of other potential trades out there. We don't need to force action on something that has not been producing for anybody in my estimation. Let's move on. Let's talk a little bit about Smuckers here as SJM comes in with a beat as well, very similar to what we saw at a Lulu. Obviously, consumer staple company versus consumer facing retail company, but Smuckers comes in at 266, 232. Revenue did come in at 221 versus the 225 expectation. That's in the billions. Revenue was up 1% year over year. Mark, this one's similar to the Lulu in the sense that at a support level, moving up in price off that support level. The ultimate question I have for you here is which one would you put on the radar for reversal analysis if you only had to pick the one of the two? You're both at a multiple time frame level of support, Lulu 300 and Smuckers here at 110. You both have reversal analysis going in. So which one would you look at if you had to look at either one?
Schmuckers, you already have support that is demonstrated. You look at that weekly chart that it's significant. I mean, you go to Lulu, I have to look back long time. Yeah, it could happen here. I don't have to look back very far to see that recent price action has already came down and said, all right, let's see nope, we like it, right?
Yeah.
And so SJM already has a foundational support level, and you're not that far away from it, right? You're not that far away from it, which is the type of thing. So SJM, it's not a bad look. It's not a bad look.
No, I don't think it's a bad look at all from a potential reversal perspective. In fact, I want to go look at some fundamental analysis here, but SJM, nice little double bottom here. You're working out a W formation in the short term right there. You got the double multiple time frame support level at 108 to 110, I would say. It's a good support level to anchor against. You come out here to the longer term time frames, even underneath that support, you just got so much support right underneath that too. So I like the Smuckers look. I would love it to kind of spend a little bit more time, maybe dial in that 120 handle. That would be a really good confirmation level to anchor against is 120 on that. Mark, that's all I got for stocks in the news here today.
Yeah, well, listen, Schmuckers. What's your favorite flavor of jam? I
Strawberry.
know mine off the top of my head. I don't have to think.
I'm a strawberry guy.
Red raspberry for me.
Red raspberry. It's always good. It's always
like
good.
red raspberry, just like on toast, some butter, like just nice little treat. Nice.
I had a peanut butter and jelly sandwich just like a week and a half ago. I felt
peanut butter and jelly sandwiches still rock. They rocked when I was 7. They rock when I'm 53.
I had not had one in a long time. And then I at Costco like a year ago or so, you know, those little peanut butter and jelly sandwiches, the Smucker sandwiches, the little, I don't even know what they're called. But anyways, my daughter had them and I got hungry one night. So I was like, oh, I'm going to try it. I'm going to try one of those. First time in 20 years I'd had a peanut butter and jelly of anything. And I was in heaven. Like I was right back as a kid. Like I was just like, wow, this is really, really good. So I would say strawberry for me, bro, but you know, throw in a traditional grape or get a nice little apricot or peach. Like they're all good. They're all good, bro. I'm good. All right, that's all I got, bro. Send us out.
Listen, Theta Thursday, you know, even though this was a macro conversation and it was a good one. It was you know, I enjoyed it. But newsletter tomorrow, podcast this weekend. But for tonight, got my Cash Flow Vikings trading lab at 7 p.m. Eastern and Coach Gino in the Cash Flow Club on our Theta Thursday programming. But we'll be back tomorrow. We have the newsletter will be out in 30 hours or so. And listen, that newsletter is the reason to sign up for Tackle Trading. And after you sign up, you'll stay around for what, Matt? Like a few other things?
Cash Flow Club, mastermind groups, trading systems, coaching, hand-holding, community, traders lounges, options 101, technical analysis 101, Forex 101, commodity 101, trading psychology 101, and about 14 other products.
And some awesome freaking people in our community.
And you can attend the amazing 2-day live education class called the Option Success Training. We do a lot in our pro membership.
We do. It's a bargain, but that newsletter is reason enough. Be sure to center, makes you smarter, makes you more prepared. We'll see what unemployment report delivers for the bulls tomorrow. I've had a very bullish week on my. We'll see, but we'll break it all down. We'll break it all down tomorrow. Take care, everyone.